Welcome to Talk Tickers. You're here for the shortcut to understanding crucial earnings calls.
That's right.
Today, we're diving into TSMC. Their latest numbers for the first quarter of 2025 just dropped.
And their outlook for Q2 and beyond, it's definitely worth unpacking.
We'll hit the key figures, the strategy, and, what it all means for the chip world. Let's get into it.
Okay, so starting with Q1 results, revenue was actually down slightly compared to last quarter.
Okay, how much?
About 3.4% in NT dollars, maybe closer to 5% if you look at US dollars.
And why was that? Anything worrying?
Not really, mostly the usual suspect. Smartphone seasonality, things slow down a bit early in the year.
Right.
But what's interesting is that AI-related demand really picked up, offsetting some of that weakness.
The AI factor again.
Exactly. And even with that earthquake back in January, they actually came in just slightly above the midpoint of their own guidance.
Okay, so they weathered that okay. What about profitability in Q1?
Gross margin landed at 58.8%.
Yeah.
That is down 2 percentage points from the previous quarter.
Why the dip there?
Well, the earthquake had an impact, definitely. Plus, you're starting to see the initial costs from bringing those new overseas fabs online.
Like the one in Japan.
Mm-hmm. Kumamoto. But they also mentioned some cost improvements helping out a bit on the other side.
Makes sense. And operating margin?
That was 48.5%, so down just half a percentage point sequentially.
All right, so overall Q1 earnings.
EPS came in at NT $13.94, and their ROE, return on equity, was still pretty strong at 32.7%.
So a bit muted maybe, but certainly not bad given the circumstances. What's the look ahead for Q2? Sound like they're expecting things to pick up.
Oh, definitely. The Q2 forecast is quite strong. They're guiding for revenue between 28.4 and 29.2 billion US dollars.
Wow, that's a big jump.
It really is. At the midpoint, that's like a 13% sequential increase. And year over year, we're talking 38%. Huge.
That's significant growth. How are margins looking for Q2? Still feeling pressure from those new fabs?
Yeah, a bit. Gross margin guidance is between 57% and 59%.
Right.
Operating margin, 47% to 49%. There's also a tax thing happening in Q2. They're accruing tax on undistributed retained earnings, so the rate jumps to around 20% just for the quarter.
Just temporary, though.
Yeah, it should drop back to maybe 14, 15% for the rest of the year. They're thinking the full year tax rate will land somewhere around 16, 17%.
Got it. Okay, let's dig a bit deeper then. You mentioned the overseas fabs impacting margins.
Right. So that Q1 gross margin, about 0.6 percentage points of the dip was directly from the earthquake and starting up Kumamoto.
And Q2.
The Q2 guidance includes another hit, about 0.8 percentage points at the midpoint, specifically because the Arizona fab is starting to ramp up now.
So building out globally definitely has upfront costs then.
Absolutely. They're actually forecasting for the full year 2025, maybe a 2-3% dilution to their overall gross margin, just from these overseas fabs.
And potentially more later on.
Could be. They mentioned it might widen to 3-4% in later years, especially with that huge extra investment plan for Arizona.
Yeah.
That additional $100 billion.
That sounds like a drag, but they still seem pretty bullish on long-term profitability.
They really do. They reiterated their confidence in hitting a long-term gross margin of 53% or higher.
How do they square that? Higher costs overseas, but still hitting high margins.
Their argument is basically technology leadership and scale.
Yeah.
They believe their edge in advanced nodes and just their massive production capacity will let them absorb those higher regional costs and still maintain strong overall profitability.
Interesting. Okay, and all this building requires capital. What's the spending plan?
The CapEx budget for 2025 is holding steady between $38 and $42 billion US.
And where's that money going primarily?
The lion's share, like 70%, is going straight into advanced process technologies, those cutting-edge nodes.
Makes sense.
Then you've got maybe 10-20% for specialty tech and another 10-20% for advanced packaging, testing, mask making, the whole ecosystem.
And does that budget include the big Arizona plans?
It includes a small portion related to that increased Arizona investment. Yes, they're starting to factor that in.
Seems like huge spending, but are they still focused on shareholder returns?
Very much so. They made a point of saying they're committed to profitable growth and specifically a steadily increasing cash dividend. That's their main way of returning cash.
So dividends, not buybacks.
Right. No mention of shifting towards buybacks. Steady growing dividends is the plan.
Okay, so what's driving this confidence and this spending? What's the demand picture look like?
Near term, for Q2, demand looks really strong, especially for their 3-nanometer and 5-nanometer stuff.
And looking out for the full year?
For 2025, they see the whole foundry industry growing, mostly thanks to, you guessed it, AI demand.
AI again.
Yep. Plus maybe a mild recovery in other segments like smartphones and PCs.
And how does TSMC see itself doing compared to the overall industry?
They expect to outperform. They're forecasting their own revenue growth in US dollars to be close to the mid-20s% range.
Mid-20s. Wow. And the industry overall.
They see the whole foundry market growing maybe 10, 11%. So yeah, they're planning to significantly outpace the market average.
That really points back to AI, doesn't it? How strong is that demand, really?
It's incredibly strong. They expect revenue just from AI accelerators, think AI GPUs, custom AI chips, memory controllers, to actually double in 2025 compared to 2024.
Double. That's massive. Can they even make enough?
What's the challenge? They're working like crazy to double their CoWoS capacity this year.
CoWoS, that's the advanced packaging needed for a lot of these AI chips, right?
Exactly. Crucial stuff. But even doubling capacity this year, they still think demand will be higher than supply through 2025.
So the bottleneck continues for now.
Looks like it. They're hoping for a better balance in 2026. And long term, they see AI reasoning models driving even more demand for leading-edge silicon.
What kind of long-term growth are they talking about for AI chips?
They threw out a number, expecting a mid-40s percentage CAGR, compound annual growth rate.
Mid-40s CAGR.
Yeah, for AI accelerator revenue over the next 5 years, starting from 2024, just huge sustained growth expected there.
Let's switch gears to the U.S. That Arizona expansion is a really big deal.
It absolutely is. That extra $100 billion announced, it's a massive commitment. Plans for 3 more wafer fabs there, 2 advanced packaging fabs, and a big R&D center too.
So the total U.S. investment is
$165 billion planned for Arizona now.
How's the first fab doing? The one that's already running.
It's in high volume production using their N4 process. And importantly, they said yields are basically the same as they get in Taiwan.
That's key. And the second fab, the 3-nanometer one?
Construction's finished. And they're actually trying to speed up the ramp to volume production because AI demand is so strong.
And then even more advanced fabs after that.
Yeah, Fab 3 and 4, planned for N2 and the future A16 tech, are supposed to start construction later this year, assuming they get the green lights.
And the R&D center in Arizona, what's its role?
Initially, it sounds like it'll mainly support the manufacturing cluster there. Improve the tech locally. Longer term, maybe some primary R&D could happen there too.
So big picture, how much of their most advanced production will be in the U.S.?
Their target is about 30% of their 2-nanometer, and more advanced capacity will eventually be in Arizona. That's a significant geographical shift.
40%, okay. What about elsewhere globally? Japan, Germany?
The Kumamoto specialty fab in Japan is up and running. Volume production started. They're planning a second specialty fab there too, construction hopefully later this year. And work continues on the specialty fab plan for Dresden, Germany. So diversifying beyond just leading edge.
But they're not neglecting Taiwan amidst all this?
Oh, not at all. They mentioned plans for 11 new wafer fabs and 4 advanced packaging facilities in Taiwan over the next several years. Huge investment at home too.
And the next big tech node, N2, is still on track for Taiwan first.
Yes, N2 volume production is still slated for the second half of 2025 in Taiwan.
Okay, let's talk tech then. N2, what are the key details there?
Right, so N2, 2-nanometer, on track for late 2025 production. Ramp up should look similar to N3. Interestingly, they're expecting more initial customer designs or tape-outs for N2 than they thought for N3 or even N5.
So strong early adoption expected. What are the benefits of N2?
Compared to their current N3E node, you're looking at either 10-15% more speed or about 20-30% less power consumption. Plus, chip density goes up by over 15%.
Pretty solid improvements. Are they already looking beyond N2?
Yep. They announced N2P, an enhanced version for volume production in the second half of 2026, promises further gains.
Okay.
And then there's a totally new node called A16, also targeting the second half of 2026. This one features something called a super power rail, or SPR.
Super power rail. Sounds fancy.
Yeah, it's a backside power delivery network. It should offer even better speed, power, and density beyond N2P. They said it's particularly good for certain high-performance computing products.
Always pushing the envelope. Now, a sensitive topic, geopolitics, tariffs. Is that impacting them?
They acknowledge the uncertainty, around potential new tariff policies. But they said so far they haven't seen any real change in customer behavior.
So no order cancellations or anything like that?
Apparently not. They're sticking with their full-year revenue forecast for now.
Are they factoring potential cost increases from tariffs into pricing?
They did say they're talking with major customers about pricing, basically to reflect the value of having manufacturing options in different geographies.
Makes sense. But they're staying out of the government negotiations.
Correct. They emphasize they aren't involved in any government-to-government tariff talks.
Okay. And just to circle back quickly on shareholder returns.
Yeah, policy hasn't changed. Focuses firmly on sustainable, steadily increasing cash dividends. No plans for share buybacks.
All right. Let's shift to our This Is Not Financial Advice segment, purely speculative thinking time.
Okay, let's brainstorm.
So TSMC is pouring, what, $165 billion into Arizona. AI demand is through the roof. What if geopolitical tensions get even worse? To the point where big U.S. tech companies feel they have to onshore their absolute critical AI chip production.
Right, like a national security imperative, almost regardless of cost.
Exactly. If that scenario played out, even partially.
Then the demand for TSMC's Arizona capacity could go absolutely bananas, way beyond even what they're planning now. It becomes strategically priceless real estate, essentially.
So here's the really wild, purely hypothetical trade idea linked to that thought. Forget TSMC stock itself for a moment. What about the ecosystem around that Arizona site?
You mean like suppliers?
Maybe even more indirect. Think about, say, specialized industrial real estate developers focused just on that Phoenix area, or maybe even the local utility company.
Because if TSMC builds out even bigger and faster than planned.
Those ancillary players, the ones providing the land, the power, the water for this potentially exponentially growing mega complex, could see unexpected windfall gains.
Okay, that is pretty speculative. You're betting on a specific geopolitical outcome driving demand way beyond current forecasts and then picking derivative plays.
Totally blue sky thinking. And absolutely 100% not financial advice. It's just a what if based on the trends we're seeing.
Definitely. Requires massive assumptions. Always do your own homework. This is just food for thought.
Precisely. Okay, that wraps up our deep dive on the TSMC earnings call. We hit the financials, the outlook, the massive AI influence, the global expansion. Lots happening.
Really pivotal company, and these updates are crucial for understanding the whole tech landscape.
Hopefully this gave you some valuable insights. What stood out most to you? Any lingering questions? Keep exploring.
Yeah, always more to learn.
Join us next time on Talk Tickers for another look at the forces shaping the markets.